Very good morning, everyone. Hope you all must be doing great. I'll be discussing a very important concept with you today. In fact, some of the students have suggested, sir, if you could make a short conceptual video on this topic, it would be very helpful. Even I find that this topic is quite important to take, so I'm making a small video today. Actually, the first question, that is 15 marks question, most of the students find it a bit difficult. It is time consuming also. Even if you have already been through on with some of my videos which I have posted recently regarding the total income questions, where I have strictly recommended that please pick this question at last. First, complete your other questions in your question paper and then come to this question, because this question is bit time consuming. If it might happen, if some student, if any of the student pick this at the first, they might end up spending a lot of time, and it's a high probability that the other questions may be left out. So it's very much important. Please maintain the speed from the very beginning and always pick this total income question at last. What I'm doing today is I have compiled most of the common adjustments, important adjustments which examiner is repeating in his questions. So I have analyzed some 5 or 6 past year papers, and I have jotted a list of 8 or 10 adjustments which are commonly repeated, right? So I'll be discussing those adjustments with you so that whenever you pick your total income questions, you will be able to do that question very comfortably. So let's start with these adjustments one by one. So first of all, the first adjustment, I'll give you a brief background about the first adjustment. See, let's say there is Mr. Swami and his P&L account is given to us, and we are required to compute the total income of Mr. Swami. He's an individual assessee. We need to calculate the assessee's total income, and a P&L account is given to us. And let's say this person is also, it has been given to us that this person, Swami, is a partner in some other partnership firm. So he is a partner in some firm. Let's say there is a partnership firm ABC and Associates, and this person is a partner in this firm. We don't have to calculate the total income of partnership firm here. We have to calculate the total income of this individual, Mr. Swami. But one of the adjustment is that Swami is a partner in ABC and Associates, and he's getting a remuneration in the form of interest, in the form of bonus, commission, or salary. So we understand, we know, because please revise your concepts also. We know that we have section 28. Section 28 is charging section of PGBP. It says, if you are a partner in any partnership firm, and if you are receiving remuneration in the form of interest, bonus, commission, salary, etc. from the partnership firm, this is your PGBP income. Fine enough. So what is given to us is that Swami's P&L account, and in his P&L account, let's say he has credited the interest received. Interest received from partnership firm. First of all, tell me, is it an IFOS income? Interest is generally IFOS income. First of all, tell me, is it an IFOS income or it should be PGBP? It should be PGBP. Why? Because section 28 strictly says that if you are a partner, you are receiving remuneration, it is your PGBP income, no doubt about it. So if he has written interest from partnership firm, it's okay, it's fine enough, because this is a PGBP income. So we don't have to do anything out of it, it's correct. But let's say it is mentioned that he has received, let's say if he's a sleeping partner, then what will happen? Is it allowed or not? Yes, it is even allowed, because we understand for other remuneration, we don't allow to non-working partners. But if it is a non-working partner, if it is a case of interest on capital, then we can give it to the this interest to the non-working partner also. That is not a problem. So this is a brief background about the adjustment number 1. Now let's read it out. It says, the interest received represents, so there is an assessee and he has credited some interest received. Interest paid or interest received? Interest received, income side. The interest received represents the interest from partnership firm. Okay, fine enough. It's a PGBP income. So he has credited that interest in P&L account. Good enough, no problem. Where the assessee is a sleeping partner, no problem still, because this is interest. Interest received amounting rupees 2 lakh, duly authorized by the partnership deed, at a rate of 15% per annum on the capital employed. So what he has done is he has received interest of rupees 2 lakh and he has credited this in a penal account. No problem as of now. And it is as per the partnership deed. Okay, no problem as of now. But they have said that this interest is at a rate of 15%, 15% per annum. We understand that if a partnership firm can pay interest to working or non-working partner also, as per the partnership deed, but maximum rate of interest is only 12%. So the rate of interest should be at a rate of 12%. And here this 2 lakh comprises 15%. It is 15%. So please tell me, is it allowed for the partnership firm? The answer is no. Maximum 12% would be allowed to the partnership firm, and it can only become this income up to 12%. So what we have to do is, out of this 2 lakh, we are okay with it if this would have been 12%. If this would have been up to 12%, no problem as such. But here it is 15%. So how much is the extra amount which he has credited? 3%. So 3% is the extra amount. This we will say, no, it will not become his income, right? Because it will not be allowed to the partnership firm. Although we don't have to calculate any income of the partnership firm, but we understand that partnership firm can pay interest as per the partnership deed, whatever is the interest as per partnership deed, but subject to maximum 12%. So here they have paid 15%. So we will say no, only 12% is allowed. 12% can become his income. 3% will not become his income. So what we have to do is we have to find out how much is 3%, and then we will subtract it from the income side. We will subtract this from the income side. So first of all, tell me how much is 3%. So you can say, sir, 2 lakh is equal to 15%. This is simple mathematics. You can easily do this. So 2 lakh is equal to 15%. So how much is 3% divided by 15 into 3? It would be 2 lakh divided by 15 into 3. This is coming as in my calculator 39,999.999 and so on. So I can keep it as 40,000 rupees. So 40,000 is the extra interest which this guy has credited in his P&L account. So what we will do is this 40,000, we will take it out from this credit side. So we will say, no, this is not your income. So what should we do? Whenever I'll be computing my PGP, should I add or should I less subtract? So you should subtract, because now you have already credited 2 lakh rupees at the income side, but 40,000 is the extra income which you have credited. So please take it out. So if I'm taking my income out from here, so what impact it will make? Sir, my profits will be reduced. So I have to subtract, correct? So now I believe that you got this adjustment. So you have to subtract less excess interest from partnership firm, right? And you can write this amount, this calculation, and 40,000 should be subtracted while computing your PGPP. Got it? If this adjustment will come in your examination, then please don't make any mistake. Correct? Okay. Next one. This is good enough. Second is, assessee paid job charges for the value addition of the fabrics, rupees 90,000, without deduction tax to job worker by an account paycheck. Okay. 2-3 things. First of all, assessee has paid job charges. First of all, tell me, is the job charges is an allowable expense or you have to disallow it? So it's an allowable expense, a business expense, so we can allow it. So this is a very common adjustment. I have seen this type of adjustment in many of the questions in the past year papers. So please, this is quite an important adjustment. So job charges, say if assessee, let me take this example itself. Let's say if assessee has paid job charges, so it's a common business expense, it should be allowed. It should be allowed, although you don't have to mention the section, but if you ask me, the section is 37. Paying job charges is a general business expense. It can be allowed, no issues at all. So what assessee has done is, assessee has paid 90,000 rupees. But this person, it is mentioned that this person has not deducted the TDS. So we understand there is a section. If you remember the section number, you can quote it. Otherwise, no need to quote the section number. The section number here is 40 small. It says that whenever you are making a payment on which TDS was supposed to be deducted and you have not deducted the TDS, then 30% of this amount shall be disallowed. And we assume that you are making this payment to a resident within India, right? Because we understand section 40A also says, please revise this 40 small a also. Section 40A small a also says that if you are making a payment to a non-resident, or you are making a payment to outside India, if you are making a payment outside India, then and on which TDS is required to be deducted, and you have not deducted the TDS, then we will disallow 100% of the expenses. So if they have mentioned, if they would have mentioned that this job worker is a non-resident, he's sitting outside India, then I would have disallowed entire 90,000. Then 100% will be disallowed in such cases. But here they have not mentioned anything. So we always presume, if non-resident is not mentioned, we always presume the assessee is resident. Simple, he is residing in India. Or even the job worker is residing in India, right? So what we have to do is we will disallow 30% out of it, right? So 30% would be 27,000. So on this, TDS was supposed to be deducted. So here, this is an important adjustment and it is frequently repeated. It is frequently repeated. So you have to disallow 30% out of it, 27,000, you can add it back. So I believe that this is a simple adjustment. You will not make any mistake over here. Okay, one more thing. Even this doesn't, generally it will not come in your examination, but still I'm telling you this. See, if TDS was required to be deducted and you have not deducted the TDS, then we are disallowing 30%. What if TDS was not supposed to be deducted? Then you can pay 90,000 without TDS also, because TDS was not supposed to be deducted. How you will come to know that TDS was not supposed to be deducted? You don't have to do it, but if there is an indication in the question. See, let's say assessee is an individual. Let's say assessee is an individual and he has to deduct TDS. Generally, we know that this person has to deduct TDS if the turnover of the last year, is more than 1 crore in case of business, or in case of profession, it is more than 50 lakh rupees of the last year, correct? Of the preceding previous year. So if it exceeds this amount, then this person is liable to deduct TDS. So generally we assume whenever such type of question is asked in your question paper, generally we assume that assessee was liable to deduct TDS and he has not deducted TDS. That is the reason we are disallowing 30% out of it. If this would have been non-resident, then 100%. But in case, if something is mentioned, this I am telling, if it is specifically mentioned in the paper, generally it is not mentioned, but if it comes in your examination, that this assessee's last year turnover was not more than 1 crore 50 lakh as the case may be, it means that this person was not liable to deduct TDS. If they give you this indication, if they specifically mention this, that his turnover of the last year was so and so, and it was less than 1 crore 50 lakh as the case may be, then see how much you will disallow. No, in that case you will allow everything. Why? Because this person was not supposed to deduct TDS in that such case. So if this person was not supposed to deduct TDS when he's making a payment to the resident, then there was no requirement of deducting TDS. Then you can allow entire 90,000. But this thing I am only saying when the question will specifically tell you that his turnover was so and so. Otherwise, we will always assume that this person is liable to deduct TDS, and if he has not deducted, then 30% will be disallowed. Got it? So in this case, just go normally and 30% will be disallowed in such cases. Third, 25,000 paid to creditor for goods in cash. This is again a very frequent adjustment, and you understand the section number is 48.3. If you remember the section, go and quote it in your exam. Otherwise, no need. You understand, if you make a payment of more than 10,000 rupees in a single day to a single party, then it is not allowed, right? And that amount which is in excess of 10,000 will not be allowed. So if you have made a payment of 25,000, it will not be allowed. So you have to add it back, right? So 25,000 paid to creditor for goods. See what would have been the picture initially. Let's say if he has purchased it on credit. So what he would have done is he has debited two purchases 25,000 rupees in his P&L account. And since it was a credit, so we would have allowed it on accrual basis, on mercantile basis, we would have allowed it. But now it is mentioned that to this creditor, he has paid in cash. It means that this expense is paid in cash. So it will not be allowed now. So 25,000 rupees we have to add back because it is in excess of 10,000 rupees. So this is an important adjustment, but at the same time easy. So this you can easily do. Fourth one is entertainment expenses include 25,000 for dinner to customers in a 5-star hotel. See, entertainment expense. First of all, tell me entertainment. Generally, entertainment expenses are allowed. The answer is yes. It's normal business expense. So in business, there for a businessman has to spend something on staff welfare, on outing, team outing, dinner, lunch, etc. So it is a business expense, right? And second thing is, it is mentioned that 25,000 is for the dinner to customers in a five-star hotel. So some students might think that this is a personal expense. No, it is not. It is a kind of sales promotion expense. So every businesses can give some parties to their customers, to their suppliers, to their business contacts. They can give parties, right? So this is a normal business expense. So if this will come in your, this such kind of adjustment will come in your question, then please allow this. There is no problem as such. So you don't have to do any kind of addition or subtraction. This is allowed. This is no problem we have. So 25,000 is the entertainment expenses, easily allowed, right? But yes, so I can say that you have to ignore this point. You don't have to do any kind of calculations. See, whenever you are ignoring any point which is given by the examiner, so you have to tell the examiner, you have to give some respect to the examiner. Ki, boss, you have given this point and we are not taking this point into a computation. Reason being, because this was a normal expense, and if it is debited, already debited, we are not supposed to do any kind of computation over here. So you just have to give a note in one single line. Please give a note in one single line that this is an allowable business expense. It is kind of staff welfare, or sorry, it is not staff for, if this would have been for employees, it would have been for staff welfare. If this is for customers, suppliers, it is for business promotion expenses. So it is a normal expense allowed. Okay. Fifth point, employer remuneration. Okay. This is an important adjustment. At the same time, it is quite tricky also. Why I am saying tricky, I'll tell you out. Let me give you a brief background about this. First of all, tell me whether there is an assessee, his P&L account is given to us. Whenever he is paying, let's say, salary or any type of expense he is incurring, let's say he is paying salary. So it is an allowable expense. He's paying salary to the employees. It is an allowable expense. What if he is paying salary or any expense? It could be salary, it could be any expense. Let's say if he is paying to his related party. If he is paying to the related party, to a relative, to someone who is related to him. So we understand then also it is allowed, but it is subject to section 48(2). We have section 48. What this section tells us, 48(2) tells us, no need to remember the section number, but you should know the provision. So whenever you make a payment to a related party, if this payment, if this expense which you have recorded is at the fair market value, then we have no issues. 48(2) tells us if you have made a payment which is in excess of fair market value, then such excess will not be allowed, right? So if this amount is at fair market value or less than fair market value, then we are okay with it. If this expense you are making and you are paying to the related party, which is more than the fair market value, then we are not going to allow it. So this is easy, correct? So this is section 48(2). Now let's read it out. Fifth point says employee remuneration. Okay, this is salary to our employees. Includes a sum of 3 lakh rupees. Okay, so there is an employee remuneration and there, let's say there is a salary of rupees 10 lakh and it includes a salary of 3 lakh. So right now they are talking about this 3 lakh rupees. So salary paid to the employee includes 3 lakh rupees. Okay. Paid to assessee's wife. Here, this person is making a payment to his wife. So that is a related person who is working as a manager in his office. Okay. She does not have any technical or professional qualification or experience required for the job. I'm repeating this line. She does not have any technical or professional qualification or experience required for the job. Okay. The payment of salary was as per the market rates in comparison to similar work profile. First of all, the payment which you have made is at the market rate. It is not above the fair market value. So first of all, this 3 lakh expense, this 3 lakh which you have paid to your wife, the assessee has paid to his wife, it is at the fair market value. It is as per the market rate. It is not above the fair market value. So 48(2) will not come into the picture. So 48(2) will come into play only when the payment is made to the related party, which is in excess of fair market value. Here it is not excess. So 48 will not come into picture. So 3 lakh is an allowable expense as per 48. 48 will not come into picture. But I'm emphasizing on that line. She does not have any technical or professional qualification or experience required for the job. Have you read this line somewhere? Yes, sir. In the chapter of clubbing. So we have a chapter of clubbing also, where we know that if there is any individual who has a substantial interest in a business, who has a substantial interest means 20% or more interest. So any individual, if he or she has 20% or more substantial interest in a business, and his or her spouse receives any remuneration from such concern, if this spouse receives any remuneration from the concern, then if it is with adequate technical knowledge, qualification, skills, then it is okay. You can pay to the spouse also. But if it is without any qualification, experience, or knowledge, then whatever the income which spouse is earning, first of all, we will compute this income in the hands of spouse. Then whatever is the income will be added back, will be clubbed in the hands of individual. So first of all, tell me whether individual has a substantial interest here. The answer is yes. They are saying assessee spouse, means the assessee is the 100% owner of this business. Correct. See, they have mentioned the assessee's spouse, assessee's wife. So assessee, we are calculating the income of the assessee. So assessee's wife means assessee is the 100% owner of this particular business, and he is a substantial owner. His spouse is getting a remuneration. How much? Rupees 3 lakh. She is getting a remuneration of 3 lakh. First of all, calculate the income of spouse. First of all, in clubbing, what we do is, first of all, we calculate the income of that particular person. Although we don't have to show this in the exam, but still, practically, first of all, calculate the income in the hands of that transferee. And then whatever is the income computed, it will be added back in the hands of the transferor. So here, 3 lakh rupees is the salary income. So first of all, compute the income. We know that we have to give standard deduction also. That is the reason I am saying that this is a tricky adjustment also. See, they have asked you about clubbing as well. They have asked you about the salary as well. So if we have to give the standard deduction of 50,000 at least, then the salary income will become 2.5 lakh. This is salary income. And now this salary income will be clubbed in the hands of individual. Although we agree that individual is running his business, he has PGBP income. But in this case, this person will have, whenever we will be computing his total income, whenever we will be filing his return, we will also show salary income. How much? 2.5. 3 lakh or 2.5 lakh? 2.5 lakh, right? Because she is getting a remuneration of 3 lakh. So we understand that this is the gross salary. This is not computed salary. This is gross salary. We have to give 50,000 standard deduction at least. So it would be 2.5 lakh. And we also know that whenever the income is clubbed, it should go in which particular head? The nature of the income. So the nature of the income was salary. So whenever it will be clubbed again in the hands of transferor, it should be in the same head. So salary head will appear. Although I understand this individual is not working anywhere, he is having his own business, but still salary head will be here. So salary income would be 2.5 lakh. That is the reason I have mentioned that this is quite a tricky adjustment also. So some students will apply 48.2 here. No, 48.2 will not be applicable. Why? Because it is at the fair market value. If this would have been more than the fair market value, then 48.2 would also come into picture, right? But yes, clubbing will be there because she is getting a remuneration without any technical or professional experience or skills. Got it? Easy and important. Tricky also. Sixth, rates and taxes includes a sum of 10,000. This is a common adjustment, and I believe that you will not make a mistake over here. It's an easy adjustment. Rates and taxes include a sum of 10,000 paid as municipal taxes of the house. We know that. See, if it is a P&L account, so we always assume that all your expenses should be related to PGBP. But in case, if the assessee has debited any expense which is related to some other heads of income, it is not PGBP, then you have to take it out from here. You cannot allow other expenses under PGBP. So let's say, so in this question, in this adjustment, they are saying that there are some rates and taxes, and it includes 10,000 expenses related to taxes related to house property. So you have debited 10,000 rupees. First of all, you have to add this back. So add this back because this expense is not PGBP. This is other head expense, right? And it will go in other head. So in other heads, we have, first of all, we have to add it back. And second, whenever you will compute your house property, so from GAV, we understand from GAV, we deduct municipal taxes. So you have to do accordingly in while computing your house property income. So first of all, it will be disallowed while computing PGBP, and it will be allowed under house property while computing house property from GAV minus municipal taxes. And if this house, let's say, if this house is self-occupied, we understand in that case, we start from NAV onwards, not from GAV. So in that case, for if it is a self-occupied property, then you understand that even municipal taxes expenses will not be allowed because we start that computation from NAV itself. Correct? Got it? Okay. So this was easy. Opening and closing stock adjustment. This is very, very easy. And I don't know why some students get themselves confused over it. But I'm telling you that this is very easy. Just apply your logic. I'm just making you revise this particular adjustment. See, just understand this. This is a P&L account. We have expense side over here. We have income side over. First of all, tell me, if income is getting increased, let's say finally, whatever is the effect of the adjustment is, let's say the effect of the adjustment is your expenses. This is expenses side. Let's say your expenses are getting increased. What effect it will make on your computation of PGBP? Sir, if my expenses are getting increased, it means my expenses are increasing, my profit will decrease. So I will say if my expenses are increasing, if my expenses are increasing, I'm not making more arrows. If my expenses are increasing, it means my profit will decrease. So I have to subtract. I have to do a calculation. My profit would be decreased. So I will do subtraction. I will do less by that particular amount. Correct? On the other hand, if I'll say that your expenses are decreasing, so what effect it will make? Your expenses are decreasing. So if my expenses are decreasing, it means my profit will increase. So if my expenses are decreasing, it means my profit will increase. So I will have to do a computation addition. I have to add that amount. Correct? Simple enough. Just remember this logic. Even you don't have to remember these things also. Just remember the logic. What will happen if my expenses are increasing? What will happen if my expense will decrease? Similarly, if I tell you, if the final effect of your adjustment is that your income side is increasing. If I tell you your income is increasing. Sir, if my income is increasing, we understand, sir, my profit will increase. So I have to add it. Correct. So I have not learned. You don't have to mug it up that my income is increasing. You have to add. My income is decreasing. You have to subtract. No, please apply your brain. You can easily apply them, right? And you have such a good brain, right? If your income is decreasing, so simply we know that my income side is decreasing, my profit will decrease. So we will do subtraction. Correct. Now I'm erasing all these things because you don't have to learn. In fact, you just have to apply your logic. See, opening stock comes in your debit side, expenses side. So opening stock is present at your expenses side. Tell me, let's say you have to do some adjustment in your opening stock. And the final adjustment is that your opening stock was overvalued. Let's say in your information, it is given that your opening stock is overvalued. Let's say it is overvalued by rupees 10,000. Tell me what you will do. Sir, if it is overvalued by 10,000, it means that let's say I have written it 1,10,000. It is overvalued, so it should be the ideal opening stock should be 1 lakh rupees. Correct? So what we have done is actually we have written it as 1,10,000. So it is overvalued by 10,000. It should be 1 lakh, and we have written 10,000 rupees extra. So you have to take it out. 10,000 you have to take it out from here. So if you are taking this out from here, what are you doing it? You are reducing your expenses. From 110, you are keeping it at 1 lakh rupees. You are reducing your expenses. So when your expenses will reduce, tell me what will happen. Sir, if my expenses will reduce, my profit will increase. So if my profit will increase, what you will do? You will add in your PGBP. Correct? So you don't have to learn anything, just apply your logic. You have to. Okay. Tell me, if your closing stock is overvalued, they have mentioned that, let's say your closing stock is overvalued by rupees 50,000. Okay, 50. Let's say this assessee has recorded his closing stock as 250, but it is overvalued by 50,000. It means that it should be, ideally be, it should be 2 lakh. What you will do? Sir, we will make 250 and we will reduce it to 2 lakh rupees. So we will reduce 50,000. So tell me, what are you doing it? Sir, I'm reducing my income side. If you are reducing your income side, what will happen? You will simply say, sir, if I'm reducing my income side, so my PGBP income will be decreased. So you have to subtract. Correct? You are reducing your income. If you are reducing your income, you will have to subtract less. Correct? So I believe that you will be able to do this particular calculation of opening and closing stock. See, here it is mentioned. Opening and closing stock have been overvalued. Opening stock is also overvalued. Closing stock is overvalued by rupees 15,000 and 20,000 respectively. So opening stock is overvalued by 15,000. Closing stock is overvalued by 20,000. Tell me what you will do. Sir, we will correct it. So what will happen? Sir, this is my expenses side and I am now decreasing because it is overvalued. So to correct it, I have to decrease it by 15,000. My expenses are getting decreased. My expenses of 15,000 are getting decreased. It means that my profit will be added, right? It will be increased. So you have to add 15,000. Correct? Your closing stock is overvalued. So it is 20,000. It is showing more. So you have to correct it. You have to rectify it. So what you will do is, sir, I will subtract 20,000 from my income. So if it is subtracted, that what will happen in your income side? Sir, obviously my income is decreasing. So my PGBP income will decrease. So you have to to subtract 20,000 and add 15,000. Correct it? Correct, right? You will not make any mistake over on this particular adjustment. And this opening and closing stock adjustment is frequently repeated in examinations. Okay. Sometimes they can give you such points also. Let's say they have mentioned this is P&L account. Let's say they have mentioned opening stock as 1,80,000. Right? In P&L account, the opening stock was shown as 180. And in information, they can ask you that opening stock is undervalued by 10%. See, they have given you an adjustment. Opening stock is undervalued. Now they have not given you the amount, they have given you a percentage. They say that your opening stock is undervalued by 10%. It means that whatever is your stock, let's say if your correct figure of your stock would have been 100, you have undervalued it by 10%. It means that you are showing it at 90%. Right? So opening stock is undervalued by 10%. So it means you are recording it at 90%. So this amount is equal to 90%. So you have to rectify it. So what you will do is you will correct it. So what you will say, what should be the correct amount? You can easily do this on your calculator. 1,80,000 divided by 90%. Or if I show you here, it would be 180 divided by 90 into 100. So it will come 2 lakh rupees. So your correct stock should be 2 lakh. So you have wrongly recorded it at 180. Now you have to record it at 2 lakh. So what adjustment you are making? Sir, we have to increase from 180 to 2 lakh. So we have to increase it by 20,000 rupees because it was undervalued. So you have to correct it. You have to increase your stock. So tell me, your expenses side is now becoming from 180, it is now becoming 2 lakh. So you are increasing your expenses. When your expenses are getting increased, so what will happen, sir? If my expenses are increasing, my profit will be decreased, right? Your expenses are increasing, your profit will be decreased. So what you have to do is you have to subtract less 20,000 because you are calculating your PGBP income. So your profit, your PGBP will be decreased because your expenses are now getting by rectification. What is the final effect of this rectification? Sir, my expenses side, my opening stock is getting increased. Opening stock is, you can say it like this, that my expenses side is getting increased. So if your expenses side is getting increased, your profit would be decreased, obviously. Correct? I believe that you will not make any mistake over here. Okay. Ninth adjustment. This is easy. Bank loan interest. And again, it is frequently repeated because we understand that there are certain expenses which are allowed only when you make a payment up to the due date of ROI. So let's say if it is your P&L account. So if there is any expense which is covered under section 43B, section 43B covers certain expenses like bonus to employees is covered under section 43B. Any type of tax or cess payable to government is covered under section 43B. Interest is an important one. If you have to pay interest to any bank, any financial institution, including NBFCs, then it should be paid up to the due date of ROI. Correct? So let's say assessee is showing bank interest over here. Assessee is showing bank interest, let's say of rupees 2 lakh. And let's say the due date is 31st July 2024. This is the ROI due date. And if it is mentioned in your question that out of this 2 lakh, rupees 1,50,000 is paid on or before this due date. Rupees 1,50,000 only is paid on or before this due date, and the remaining is not yet paid, or the remaining is paid after this due date. So what will happen? Because this is, although bank interest is allowed, taking loan and paying interest on it is allowed under section 36, but it is subject to 43B also. 43B is quite an important section that it says that certain expenses, we have a list of 5-6 expenses, it is allowed only when they are paid up to the due date of ROI. So one of them is bank interest. So if it is up to you have to just see how much is paid up to the due date of ROI. So let's say if it is 1,50,000 is paid, then you can allow 150, and whatever is not paid up to the due date of ROI, you have to disallow it. So 50,000 is not yet paid, so you have to disallow that 50,000. You can simply add it back, right? So whatever is the due date, let's say if the due date is 31st October, then you have to take accordingly how much is paid up to the due date. It is allowed. The amount which is not yet paid up to the due date, that will be disallowed if it is subject to 43B. Only those expenses which are allowed under section 43B, which are covered under section 43B. If any expense is not covered under section 43B, so it can be allowed even on due basis, even if you have not paid, if that expense is not part of 43B. Correct? So this is an easy adjustment you can do. Then there's miscellaneous expenses include 10,000 rupees contributed to Prime Minister Relief Fund. Okay. So tell me, first of all, tell me, in your P&L account, you can only show those expenses which are related to your business expense, right? Your business or profession expense. So if there is any miscellaneous expenses written over here, miscellaneous expenses, let's say 2 lakhs written over here. Generally, it is allowed. If nothing is mentioned, so we can say it would have been a business expense. We can allow it under section 37 general deduction. But here it is mentioned that miscellaneous expenses, whatever is the expenses, let's say it is 2 lakh rupees. Out of this 2 lakh, 10,000 is the contribution to Prime Minister National Relief Fund. Contributing to Prime Minister National Relief Fund, is it a business expense? The answer is no. So you have to disallow that. So what you will do is you have to disallow this 10,000 rupees. So you will add it back. So this expense is debited, but it is not a business expense. So we have to disallow it. So add it back. Prime Minister National Relief Fund, not a business expense. Not a business expense. So you have to disallow 10,000 rupees. Now, we know that whenever a assessee contributes to Prime Minister National Relief Fund, there is a deduction under section 80G. But 80G is only allowed under optional tax regime if the assessee has opted out from the default tax regime. Then only 80G is allowed. So if the assessee is following default tax regime, just disallow this 10,000 and do not give 80G deduction in case of default tax regime. But in optional tax regime, first of all, you have to disallow it. This is common. Under both the regime, you have to disallow it because this is not a business expense. But later on, if the assessee is following optional tax regime, please give 80G deduction also. And you understand for Prime Minister National Relief Fund, we have 100% of the amount contributed. So 10,000 rupees would be allowed under section 80G only in case of optional tax regime, right? So these are some important adjustments which are frequently repeated in your past year papers. I was thinking that this is quite an important topic. That is the reason I have discussed this. I need your feedback. I need your recommendation. How did you find this particular video? Is it helpful, useful or not? Your comments, as I've said in the earlier videos also, that your comments are very important to me. actually it really motivates me a lot. I feel that you are communicating with me, whatever is your requirement. If you feel, because this is also suggested by some of the students, that please take a small video on this particular topic, although this is not yet small, approximately 40 minutes have passed, but still, but it is worth it, right? So I would request you to please comment at least how you're finding this video, or comment if you require any particular help in any particular topic. I'll be taking that up also, right? Till then, thank you so much. Bye and take care. All the best. Be consistent in your studies. Bye.